Welcome back to This Day Live, the Sunday talk show here on Arise News Channel. With me in the studio are Professor Bola Akinteriwa, DG, Bolitag Center for International Diplomacy and Strategic Studies, Yemi Adamolekun, Executive Director, Enough is Enough, Professor David Rawo, Professor of International Relations and Strategic Studies at the University of Lagos, and Chike Ogia, former Commissioner for Information, Delta State, and Managing Director of MacFoley Limited. The naira gained significantly against the US dollar at the parallel market on Tuesday last week after crashing to an all-time low of 710 naira shortly before that. Currency traders in Abuja and Uyo said they bought the dollar at about 635 naira and sold between 640 naira and 645 naira on Tuesday against 685 naira it traded in the previous session on Monday. In quotes, the market surprised us today. A lot of traders closed up their shops due to losses incurred, a currency dealer in Uyo said. He said at the opening of sales on Tuesday, they were exchanging the dollar between 660 naira and 680 naira per $1 in the morning, but that it suddenly dropped to 630 naira to 635 naira to $1 by afternoon, forcing a lot of traders to incur losses. However, the naira lost at the official market on the same day. It weakened to 0.42% to 430 naira 67 kobo per $1 on Tuesday from 428 naira 88 kobo it exchanged at the NAFEX window in the previous session on Monday, according to data posted on the FMDQ website where Forex is officially traded. The currency climbed to a high of 415 naira and dipped to a low of 444 naira before closing at 430 naira 67 kobo. Forex turnover rose by 163.3% on Tuesday, with $158.68 million posted against the $60.27 million recorded the previous session on Monday. We're now being joined by Dr. Moda Yusuf, Chief Executive Officer of the Center for Promotion of Private Enterprise and former Director General of the Lagos Chamber of Commerce and Industry. Good afternoon. Thank you for joining us.
Yeah,
lovely
my
to
pleasure.
see you.
Thank you.
So, a bit of good news. We've had a bit of a bounce back by the naira. I mean, what do you make of it? How do we situate it? Is this cause for excitement?
Well, it's too early to celebrate because we are talking still about an exchange rate of over 600 naira to the dollar, which is still very, very bad. But what is important in all of this is to situate all these exchange rate issues within the proper context. Because if we understand the context, we know what kind of steps to take to deal with the situation or with the problem. First, we need to realize that exchange rate is a price. And in economics, what determines price are factors on the demand side and factors on the supply side. So to understand the dynamics of all this exchange rate issue, we need to situate it within the context of the factors driving demand and factors driving supply. Within that context, we'll be able to understand what we need to do. First, around the issues of the factors that drive demand. The first big factor driving demand and putting a lot of pressure on the foreign exchange market is fuel importation, which of course is an irony because we are an oil-producing country and we are perhaps the only oil-producing country in this situation where we spend billions of dollars importing petroleum products rather than reaping from the windfall that is happening in the oil market. So that is one major issue. The pressure of importing petroleum products, I'm talking about PMS, diesel, aviation fuel, and the rest of that. It's putting a whole lot of pressure of demand on the foreign exchange market, and it's affecting our reserves as well. Then, of course, you have the challenge of round-tripping. Round-tripping is the opportunity that has been created by the current exchange rate regime, where you have a very big premium or difference between what the exchange rate is at the official window and what it is in the parallel market. It has never been this wide, at least in recent history. We are talking of a premium of close to 50%. You have about maybe 625, 626 or so in the official window. You have over 600 in the parallel market window. So you are looking at close to 200 naira premium. So that in itself is generating or fueling demand that ordinarily should not be within the ecosystem. Because you have a lot of people who are there as currency brokers. Theirs is to take advantage of the rate in the official window and sell it in the parallel market window. And this situation is fueling demand and is creating a whole lot of distortions in the foreign exchange market. Even beyond that, it's creating a whole lot of transparency issues of corruption and all of that within the entire ecosystem of the foreign exchange market. So that is also a major factor, and that is a policy-induced challenge. Then we have the challenge of the fact that most of our manufacturing firms are also dependent on imports for their raw materials and for equipment. And this is happening because all the key core industries, when I say core, they are heavy industries that are supposed to support the light industries. Examples are the iron and steel, the petrochemicals, the paper, paper industry like the Jepa paper mill, the Okubo paper mill, and even the aluminum smelter. These are heavy industries that are supposed to support these lighter industries. But because all the investment that we have made in those industries have gone moribund, practically all of them have collapsed. So all these industries don't have a choice than to depend on imports. Because if you look around, most of our manufacturing products, they need either things like packaging, which are plastic related in most cases. These things are produced from polypropylene, which you normally get from petrochemicals. Or you need iron and steel for fabrication, for spare parts and all of that. Or you need this aluminum smelter, aluminum ingots and things like that for those who are in cables and all of that. And the same thing with those who are in paper industry or publishing industry. So because of the failure to sustain and develop these core industries, the manufacturing sector is now heavily dependent on imports. So that is how. Then there's also the issue of the confidence in the naira itself. Because the function of a currency, one of the major functions of a currency, is to be able to serve as store of value. When a currency begins to fail as a store of value, people begin to lose confidence in the currency. And that leads people to seeking other avenues to store their assets in order to preserve the value of their assets. That's why some people, almost something like a currency flight, you are moving your money from naira into euro, into dollars or so, or you go and buy assets or buy shares. That thing is happening because of the loss of confidence in the currency, because of the rate of inflation and the rate at which the currency is losing value. So these are some of the factors that are fueling the demand. So if you need to do anything about this currency, we need to address those factors. Then on the supply side, now we have weak productivity and competitiveness issues. Because if you want to reduce your imports, you must have capacity to produce locally. And not just producing locally, you must be able to produce competitively. Because of all the structural issues that we have in this environment, producing competitively has become an issue. That is why we have challenges with having to export, produce for export. And there are things that people can export, but at what cost? Look at the cost of diesel, look at the cost of logistics, look at all sorts of challenges regarding the inputs that exporters need, including logistics. So productivity and competitiveness is an issue. And again, if you have an economy that's very productive, you'll be able to do a lot more in the area of what you call import substitution. In other words, those things that you normally import, you can now produce locally to replace them. But if the domestic cost of production is too high, it is very easy for these smugglers and all of that to have opportunities to bring in cheaper products. So issues of productivity is very key. Then we have the challenge of insecurity. We are supposed to be doing well with our oil outputs. We all know the stories about oil theft. You know the stories about how investors have decided to leave the oil-producing area because of insecurity. You know how that has affected investment in the oil sector. So insecurity is also creating a major challenge on the supply side. Then we also have the issue, the challenge of policy. Again, that's the foreign exchange policy. If you want investors to bring in capital into this economy, they cannot bring it at the official rate. Because if an investor knows that you have a window where the currency is going for over 600, 650 or thereabouts, and you are asking an investor to come with the currency and exchange at 425, no investor will come. So the foreign exchange policy is also creating a supply barrier to the foreign exchange market. That is why we have been saying that if you have a market-reflective foreign exchange market, you'll be able to encourage a lot more people to bring in money. Even with all the challenges that we have, this economy still has a lot of opportunities for investors to come in. But you cannot unlock those opportunities if you continue to insist that anybody bringing money to this economy has to bring it at 425. So that's a major barrier to supply. So, and that is compounding the problem that we have around the foreign exchange. So these are some of the key issues that have been driving the challenges of the foreign exchange market on the demand side and on the supply side. And I keep saying it, economics is a science. It's not a question of emotions or sentiments. It's a science because, and what the attributes of being a science is that you can easily predict outcomes, even though it's a social science, because there's a human dimension to what happens in the economic space. But it's a science nonetheless. Right. So if you take some steps, if your policies are not right, you can easily predict. You see, the solution is not about, chasing around the BDCs or cutting down trees or chasing Aboki effects. No, that is not the solution. The solution is to deal with the fundamentals.
Let's talk about solutions. So policy reform, I imagine, it sounds easy for us to say, but how easy is it actually to unify the exchange rate? You also talked about dollarization of the economy. We have laws against that. The CBN Act, sections 15 and 20, the legal tender here is naira. But a lot of our businesses, a lot of our politicians don't seem to have gotten that memo. How should we begin to enforce that?
You see, on the policy, in dealing with this issue, we have what you can call the short-term solution, the medium-term, and the long-term. The short-term is the policy solution. Right now, hardly can any serious investor get the foreign exchange at the exchange rate of 425 or 426. Hardly. And the few that get it get a very tiny fraction of what their demand is. You cannot run an economy that way. And that is offloading a lot of their demand into the parallel market. So one solution that we need to quickly address, we may not merge it exactly to be one, but we have to reduce that spread, that margin. And the way to do it is for the CBN to allow the R&E window to operate as a market. If you have a market truly defined, you will not have problem of scarcity. You may have problem of high price. You may have problem of the exchange rate, but you cannot have problem of scarcity. The liquidity situation will not crash to the point we are in now, where people want to buy spare parts, even common paying subscription online with your naira card, $50. How many people can do that now? So the policy situation has allowed liquidity to dry up completely. So if you have a market, a proper market in the foreign exchange R&E window, where nobody is dictating rates, where nobody is determining who should get what, because that is not a market. That's an allocation platform, where people exercise discretion to allocate and to ration. And these things come with a whole lot of problems, including corruption. So if you have a proper market, the CBN can intervene as and when necessary and depending on its capacity. If it doesn't have the capacity, it can stay off the market. Let the market begin to move the way it will. If it has the capacity, it can now throw in some dollars, depending on its capacity. So that at least you have a market that is liquid, a market that inspires confidence of investors, a market where you have less volatility, a market that will allow a lot more investors and people to bring in private capital into this economy. So in the policy area, that is what we can do, and we can do that like yesterday. Policy doesn't cost money. It's for you to just give instruction that, okay, this is the way this market should behave. Because I can tell you, what is happening in the official foreign exchange market is something that is almost unspeakable in terms of the transparency problems in that market. So the earlier we move away from that and allow the market to function as a market and the CBN to intervene as and when it can, that is the way to go. Then in the medium to long term, we need to address structural issues. We are already taking some steps around fixing our refineries. Imagine a situation where we are able to source all our petroleum products needs locally. Imagine how much savings that we make in our foreign exchange. Imagine the impact of that on our foreign reserves. So it's not excusable that over the last 10 or so years, we cannot get our refineries to function as an oil-producing country. That is what has brought us into this mess. So if we can do that, accelerate it whichever way we can, and support private investors like Dangote and other private investors in that space, that will also help. So that the pressure that this importation of petroleum products is putting on our foreign reserves will be reduced. Then in terms of also structural issues, we need to build the capacity of our manufacturing sector to be more inward-looking, to be more competitive. If you have the capacity to be competitive, you'll be able to export and earn foreign exchange. And let me say this, even the little export that is being done now, the exporters are complaining that they cannot export with all the challenges in this environment. They bring in their export proceeds, and you say that they should come and exchange it at 416. That is the policy that is on ground. How fair is that to them? What do we lose if it's okay, you are an exporter, open your domiciliary account, have free access to it, whoever wants to buy it, you sell it on willing buyer, willing seller basis. That's a bigger incentive to the exporter than saying that you are giving 65 naira per dollar. If you give 65 naira per dollar and the guy is losing 200 naira on each dollar, what value have you brought to the person? We cannot, in a situation where we say we need foreign exchange, we need to export, and we have a foreign exchange policy that is penalizing these exporters. That is not fair. So we need to look at all of that. So if we build the capacity of this economy, our manufacturers will be able to produce first for exports, secondly for import substitution. So that many of the things that we are importing, if they have the right environment, they can produce it here and produce it more competitively. So that the need to import will be much less. Then we need to deal with this issue of oil theft and all this problem in the oil producing areas. How can we, for goodness sake, in a country where we have government, we have all the machinery of coercion, people will be stealing crude oil to the magnitude that people are telling us? We are not talking about people stealing phone or stealing something. They are moving this in vessels. How can that happen? So there's a major failure of governance. And that is part of the problem. We cannot meet our OPEC quota. Then we have all this vandalism, illegal, and all of this problem. It's also a failure of the state that things could degenerate to that point. So these are the steps that needs to be taken. If we took those steps, some short term, some medium, some long term, we'll be getting somewhere with this foreign exchange. Otherwise, if you continue the way we are going, this foreign exchange policy can cripple the entire economy. Because
absolutely.
Forex is at the center of everything. It's at the center of trade. Whether you are an importer or you are an exporter, whether you need an equipment, whether you need to produce something that you want to export or something, it's at the center of it.
But in terms of a roadmap, you've talked about long-term, medium-term, and short-term. What are we looking at here? Can you give us like parameters here, specifics?
No, parameters, if I talk about the short term, I'm talking about fixing the policy. We should move away from a situation where the CBN will be dictating the rate at the earning window, or somebody is dictating the rate. If we move away from there and allow the market to function as a market, first, we will reduce all these parasites who are in the foreign exchange market, who are there because of the huge premium, because those premiums will disappear. That will reduce pressure of demand. Then you'll be able to boost supply, because those who have been waiting to invest in this economy from outside the country will now be able to bring in their forex, if the exchange rate regime is right. Right now, what is happening is that a lot of these transactions are either not coming, or they come in through the back door. That's not what we need as an economy. So that is the short term. The medium term is to fix our refineries. We have to just do it because we don't have any excuse. Government has committed to it already. We don't know how far they have gone about rehabilitating those refineries. The Dangote refinery is also on course, but it's something that we need to accelerate. Because the biggest pressure on our foreign reserve is this importation of petroleum products. It's not only creating problem in our foreign exchange ecosystem, it's also creating problem in our fiscal operations. Look at how much we are spending on subsidy. Look at the implication of that for investment in infrastructure and all of that. Look at how that is snowballing into huge deficit. Huge debt and deficit. The debt situation is climbing. Look at the latest report. Debt service is now higher than even the revenue that we are getting. How do you sustain an economy that way? So these are major shortcomings. Then also in the medium to long term is to ensure that we have the infrastructure to support those who are in production. You cannot industrialize if you don't have infrastructure, no matter how much grammar you blow. You need check all the industrialized economies. China, with its level of industrialization, it is still investing in infrastructure till today, because they know the value that infrastructure can bring into production. You cannot produce if you don't have infrastructure. You want to be producing with diesel at 820 naira per liter. If you produce it, who will buy? Either locally or regionally or globally. How can you export your product? And yet we are talking about going to African Continental Free Trade Area. What are you going to put on the table at the continental level in terms of what you have produced? And it's about competitiveness, because international trade is about competitiveness. So we need to create the environment for infrastructure to be in place. I appreciate the limitations of government as far as financing infrastructure and all of that. There are all sorts of models that you can use. You can attract private capital from within the country, from outside the country. And a bit of that is already happening with tax credit and all of that the government has put in place. But you cannot bring in external capital if you have this kind of foreign exchange regime. That's another barrier. So some of these things are intertwined, they are interrelated. So those are the key compartments of solution that we need to do. And in terms of dollarization, you see, dollarization is a symptom of some fundamental problems. You know, if people are losing confidence in your currency, that is where these things are coming from. Part of the function of money or a currency is to serve as a store of value, apart from being a medium of exchange or a means of exchange. It's a store of value. So if the currency is losing a major quality of being a currency, you keep some money in naira, before you know, 2-3 months, it has lost value significantly. Why will you want to keep naira? So we should address that. And part of the problems we are having with the loss of value of the naira is the rate at which the CBN is funding the deficit of government. Latest figure that we see now, at least I read that on Nairametrics, about 19 trillion outstanding.
Ways and means.
Ways and means, yes. Yeah. It has a very serious macroeconomic effect on inflation and on exchange rates. So when we say we are, mopping up NPR and all of that, a major factor fueling inflation, we have not addressed it. And this is in complete violation of the CBN Act. How can we get to a point where almost 20 trillion is outstanding? And when we discuss about our debt, we hardly mention it. And whether we like it or not, it's a sovereign debt.
Of course.
It's a sovereign debt. So that is also a major factor. The CBN Act states that the CBN cannot advance to more than 5%
of the previous year's
of
revenue.
The previous year's actual revenue. Go and work out the percentage now, whether it will not be hitting 50% or more. So that is also a major factor, the monetization of fiscal deficit. Because you know the damage that inflation has done to everybody. When you talk about poverty, the number one problem that has caused the most poverty here is inflation. And this CBN financing of deficit, even in some literature, is regarded as inflation tax. That is what is referred to.
But how do you rate the measures such as raising of the interest rates by 100 basis points to curb inflation?
That is like chasing shadows. What impact has that got? Are prices coming down? It is not having any effect.
No.
Cost of diesel is still very high. Cost of transportation is high. Exchange rate is still depreciating. So what impact is the NPR having on all of this? And in any case, this economy is not so sensitive to interest rate movement. Because we still have a major issue of financial inclusion. Because you have to be within the ecosystem of the banking system, credit and all of that. For this movement to have a serious impact. Private sector credit as a percentage of GDP in Nigeria is less than 20%. In South Africa, it's over 100%. In the advanced economies, it's over 200%. That shows the nexus between the financial system and the operators in the economy. It's not the same thing here. How many SMEs have access to credit, bank credit? I'm not talking about all these, people with pockets of bank credit.
So what in real terms will reduce inflation in the Nigerian context if we can't ape what other central banks around the world are doing? Because that doesn't work for us.
In other parts of the world, I'm not sure their CBN is funding their government the way our own CBN is funding government. Certainly not. Because they have structures, they have frameworks that defines how far the CBN will go. And even in our own context,
we have that too.
We have it in our CBN Act. But that has been practically thrown overboard. So dealing with that is also part of the problem. Food inflation is a major component of inflation. So if you don't deal with insecurity, because that is also linked to it. If our major food basket locations cannot produce, how are you going to deal with food inflation? And the bulk of the food we eat here, at least close to 70%, are food that are produced here in Nigeria. Of course, we talk about bread and all of that, but if you work out the percentage, because outside the urban areas, most of all the other rural areas, they eat indigenous food. That is what they eat. And in most cases, it's generally even more affordable. But it's getting more expensive now because of this problem of insecurity. So dealing with insecurity is also a factor in inflation, in reducing inflation. Then dealing with all these other issues around the cost of production. Because those who are in production, they are not in production for charity. They are in production to make profit. So if their cost is going up, their prices will go up. And some of them have even gone under anyway, because they have pushed the prices to a level that the consumers can no longer afford. So it's affecting them. So we have to deal with issues, the monetary issues around the funding of deficit. We need to deal with structural issues around the issues of the cost of production and how we can get our manufacturers to do a lot more. We have to deal with security issues so that our farmers can do a lot more by bringing agricultural products. We can also look at even our trade policy. We don't have business maintaining high tariff on some intermediate products for manufacturers. We don't have any business doing that. I know the custom is always after revenue targets.
Yes.
But sometimes they push this into a point that they hurt investment. They hurt even the ordinary man. Because the value they get from this revenue is not up to the damage that is done to welfare and to productivity in the economy. We have to take time to do a cost-benefit analysis of some of these things. So these are some of the things I think we can do to deal with all these macroeconomic issues, inflation, exchange rates, and possibly even our GDP performance and the ability to create jobs. Because things are really bad.
Oh, they're dreadful.
Yes, very bad. And unless we deal with some of these things, we cannot continue like this. At least the one that has to do with policy, we can isolate that and deal with it. Otherwise, if you are not careful, we end up with IMF. Yes. Because if this crisis continues this way, you end up with IMF. I've heard stories of people who want to even withdraw some money from their dorm account. They couldn't withdraw.
Why not?
When the banks will tell you there's no money. Yes, there are all sorts of stories. It's as bad as that. And these things send signals. I mean, look at what has happened to the foreign airlines. Are they able to take their money out? What signal is that sending to the outside world? Look at even some foreign direct investors, portfolio investors. At least they are here to make money. If they make money, at least they have the right to take it out. Many of them are stuck here. What signal are we sending to investors out there? So these things are very serious, and I don't think it's something that we should underestimate.
Not at all, but I asked you for a roadmap because we're sort of at the twilight of the Buhari administration. Is this something that can be done within the lifespan of that administration, or is it like everything else, we're looking to 2023 for the elections?
No, well, the policy matter can be dealt with if the government and the CBN believes in it. Because what I've heard over time is that the CBN is adopting what they call a homegrown solution, an orthodox monetary policy. Whether that has worked for us or not is there for everybody to see. So within the life of this admin, even within a few months, you can deal with a policy problem around foreign exchange, policy problem around trade policy, tariffs. You have a conversation with manufacturers, they will tell you their pain points as far as intermediate products is concerned. There's no reason why a raw material should be costing, attracting a duty of about 30% or more. No reason. Because we need to look at the multiplier effect of somebody who is producing. Not just looking at the revenue that the customs will make. You know? So we can deal with policy issues very quickly. Infrastructure issues, we have to be fair. The government have been doing we have seen some efforts in that area, fixing road and all of that. I mean, that is going on well. But again, there are some roads now that have been completed up north. Because of insecurity, nobody is able to apply the road.
We have trains that we borrowed for.
Yes.
We took loans for those trains.
Exactly.
And nobody can use the
train. You can't use the train. That's also a major problem. So insecurity is also at the heart of some of these things. If you don't fix it, then it will affect so many other things. So infrastructure, we have been talking about power and all of that. Collapse of national grid here and there. It's not exactly clear what the government is about to do about that. You know, but those problems are still there. At least they still manage to fix it once in a while. We have issues with the discos, with a whole lot of issues that they raise about the value chain of electricity supply. That is also ongoing. So we must admit government is doing its best to deal with all of these things, but some of them, just as I said, are not things that we can expect to finish in the life of this administration. And what we are promised was that even the refineries will come on stream before the end of this administration. We are still waiting to see that. Because if we see that, that will also bring a lot of relief to us. And government is, I think, reviewing the strategy on insecurity, whether I'll be able to see a significant improvement between now and the end of the administration. Again, we wait and see. But we are hopeful that
always
at least
hopeful.
So something positive will come out of all the efforts.
And on that positive note, I'd like to thank you so much for joining us today.
Thank you, Tudor. Thank you.